Hello everyone, welcome to my brand new YouTube channel. Starting strong with sharing weekly analysis on gold and many more educational content to go live in the coming weeks. An important move coming up in gold for the week ahead and what that will be technically and fundamentally, let's find that out in this video. Please do watch the video till the end as I will be explaining some advanced technical levels which will be very beneficial for you. So let's begin with the weekly time frame. As you can already see, I have marked out some levels on the weekly time frame, so let us understand what they actually mean. We can clearly see the market structure creating a low, a high, another low, a higher low, and a higher high. This means that the market structure on the weekly is bullish. So what has actually happened here is, after making this high, here prices have pulled back to sweep previous low liquidity, as we can see the spike here. Then prices have moved up to sweep the buy side liquidity, after which we can see liquidity swept on the lower side after the pullback. And again, price has moved up to sweep the bullish buy side liquidity, giving us a pullback and then creating a higher high. All these things are very important in this market, and I advise to make notes as you continue to watch. Supply and demand and liquidity are the only two things that moves the market. You should know these concepts in depth to clearly analyze the charts and have an edge in this market. Switching to the daily time frame. Looking at the daily time frame, we can see very clear price action and we can easily identify the market direction to be bullish. Last week, we had identified this level of 2475 to 2470 that market can pull back up to and go bullish from here. Reason being, no candle should close below this area and market has done the same, giving the retracement, rejecting from our level and going bullish on the next day. Hence we focus on the technical analysis a tad more than the fundamentals, as we think if you master technicals, then having a grip over fundamentals is quite easy and gives you an extra edge. Switching to 4-hour time frame. Traders always talk about imbalances and inefficiencies, but let's talk about market cycle here for a moment. Market cycle moves in somewhat this way. The market consolidates, then it moves to gives us a bullish break, then consolidates again, forming another bullish break, a pullback, and then consolidation again, and so on the trend continues. Now, if we look at this chart, we can identify these market cycle patterns as you see I am marking here. There is one consolidation area, there's two, and the third one. And if we keep on looking, we can definitely find more of these. As you will spend more time on the charts, your eyes will be trained more and more to identify these cycles and all the different highs and lows and the trends. Whatever the market does, be bearish or bullish, you can always see market doing some type of consolidation. Trend-wise, I have given my bias which is bullish. In the past, your market has consolidated to then go and form a high, then moved sideways again to go and make another high. This paints a clear overall trend for us, which is obviously bullish. In a short and very easy way, let me tell you guys how to identify the highs, lows, and the market structure. We can go to the line chart and mark our zone in a very easy way as I'm about to show you. Now, how to mark a zone on the line chart? We always consider the closing of the prices to mark our zone, which can clearly be identified by this line chart. So if we look at this area, we can take the closing prices on this line chart, just the way I'm showing you, and mark our zone according to that. Now, how big a zone should be? As we can see here, we can measure this zone and it comes out to be around 90 to 100 pip zone. And given this is a higher time frame, this is totally valid. Going back to the candlestick chart, we can now see that we have wicks as well. To include the wicks, we can now refine our zone to the wicks and the closing of the prices. We can now see how we have refined our zone from the wicks up to the closing prices, giving us a much more condensed range. So we can mark out our key levels and find our entries based on these regions. I hope all of this is making sense. And going ahead into the video, definitely I'll be giving my bias and how I would like to see the market move. So stay tuned to the end of the video. Now we can use some tools to see how market has respected our key areas in the past. Using the Fib tool, we can see here in this bullish leg, market has clearly tested the 61.08 Fib level, which lies at the 2470 and 2471 area, and closed above 2475 and has moved bullish from there. This verifies for us that even the 4-edge structure is bullish. On a smaller time frame, market has pulled back, being on the sell side. Doesn't mean we are bearish. Market structure, when goes bullish, making a new high, it always comes back to test the structure level, then to continue in the trend direction. This is what gold has done here. Given that we base all our trades based off market structure, it is very important to understand what exactly is market structure and how we can identify different trends, patterns, and change of characters which adds as a confluence for us to take our trades. So we have here all-time high of 2530. Let's mark this out and quote it as ATH for understanding. Yeah. And now we can move down towards the 1 hour time frame to further deepen our analysis. On the 1 hour time frame here, we can see so many range areas, different lows and different highs. This is where it might get a bit confusing to understand where to trade from. For this, we again go to the line chart to beautifully identify our key zones. Line chart clearly shows us this area where market has formed support multiple times and now has broken past it. We will mark this zone from here up to the current price action, and the level this is on, as you can see from the right hand side, is the 2500 price level. This means if next week market comes to retest the 2500 level, maybe market goes a bit bullish first, then pulls back, giving us an internal structure coming towards the downside, which we call as a retracement, retests the 2500 area, we can then see prices going to the all-time high very easily. A very good zone to capture this long move from. Just slightly gonna adjust the marking of this area. We have another level here where market has rejected twice, forming a resistance. So we have to be very careful on how price reacts to this level during the long position from 2500. Please bear this in mind and see how price reacts to this level. So once price reaches the all-time high, we can again expect a pullback into this freshly marked zone. And if prices give us a structure shift, we can see a move up to 2550 or 2560 potentially. Market has respected the 2500 level nicely and has moved bullish from there. So as I said, if we get the retest of the 2500 area, prices can move up to the all-time high and further even up to the 2550-60, given market structure plays out the way I have explained. Hope everything is clear in terms of making the zones and the levels. Now let's talk about the bearish scenario and when we should look at the market with a bearish bias. If market shifts the 1 hour structure to the bearish side, something like market closes below 2500, forming a low, and then goes to retest the 2500 level, shifts internal structure, then we can see prices fall to 2460 and further down to 2450, after that 2430 potentially. This is so not ideal to move with the paths. I'm just struggling a bit with my mouse track. But yeah, there we go. There we go. Just the way we spoke about the bullish scenario, we can have market creating lower highs and lower lows for the bearish scenario. The zone we have on the bearish side is right this one, where market prices can come to test this base area. Let's adjust this a bit more. Market as support. I'm gonna just take it up to the top of the wick. Yeah. So market can come down to test this area in a bearish scenario. Now, my bias for gold is until prices are above the 2500 level, I will look at it with a bullish bias. Obviously, once we have a structure shift to the downside, as explained previously in the bearish scenario, I'll change my bias to bearish and look for potential sells. Hope everything that is explained here makes sense and can be of help for you to establish a bias and take potential trades. Fundamentals to consider for the week. We jump onto Forex Factory to see what news we have for the week. Given gold is affected by the dollar index, it is very important to take into consideration the high and the medium impact news for the US dollar. We have news like the consumer confidence on the 27th of August. If we go ahead, we can see there is a news about crude oil investments, which is a medium impact news again. And the next day we have the very important unemployment claims and the prelim GDP. All this data affects the dollar index, which can give us quite some volatile moves on gold in the coming week. So make sure you mark the key levels and play them with the right risk management and money management. Again, key levels to be marked on the higher time frame and entries on the lower time frames. This is my analysis of gold, or forecast if you may like, for the coming week. Advice for all is to move with caution given the market sentiment ahead of the speculative Fed rate cut, which everybody has been waiting for. The coming week is going to be interesting, and let's see if our levels play out so we can have a debrief of our forecast and trades end of the week. I really hope this was useful to you. On this channel, I'll be sharing my weekly forecast of gold, and we'll also be sharing educational content of market structure, supply and demand, and how to mark your key levels. Please like, share, and subscribe, as few simple clicks will help me massively to provide content on this channel. Thank you for tuning in, and I shall speak to you in the next video.